I'm Brian Kilb, Executive Vice President of Landaas Company. The conflict between what we feel emotionally and what we think rationally hurts investors. And what we want to do is use fundamental data, when it comes to stocks, interest rates, earnings, and overall price valuations, to overcome the emotions that will tell us to do something contrary to what's good for us. When it comes to buying equities, you want to buy cheap, right? When it comes to equities, you want to sell when they're expensive. When you look at what makes stock prices cheap, it's often an event that creates a great deal of fear. And that fear is what compels people to stay on the sidelines. It's what compels people not to buy. And to be a successful investor, you want to overcome that fear and be able to buy when stocks are cheap, in spite of the fear that's out there. To become a successful investor, you want to be able to sell those securities that are richly priced, that you've made money on, in spite of your greed, in spite of the desire we have as investors to want to keep those really good things. You consider what you're doing when you buy a stock. You're buying a company and an expectation for future earnings. Then you're going to discount those future earnings by some rate of interest. Okay? So really, when you're buying a stock, you're buying a stream of earnings discounted by an interest rate. So what's really important to the investor when buying stocks? Interest rates and earnings. So if you're paying attention to the interest rate environment, if you're paying attention to the earnings environment, and you have some sense of valuation in the marketplace, you can combine those factors to make really good decisions. If we wait until an event drives stocks prices higher or lower, then already the emotion is taken over and it's difficult to bring it back to some kind of rational behavior.